According to Elon, Twitter eventually will become X, the everything app. However, there is a problem. Twitter has just accused Musk of manipulating this legal process, and more importantly, Twitter has refused to accept this offer, so Musk's deposition and trial might still happen. Furthermore, finally, the real reason why Musk suddenly decided to buy Twitter has been revealed. As you know, Musk is back at the table, and as he's hinted, everything is going according to his plans. Musk's interesting letter to Twitter shows that Elon is hitting where it hurts. Moreover, Elon explained that he will only go through with the deal if Twitter will meet his very important request. In addition, before accepting Musk's new offer, Twitter is creating a smart plan to guarantee that Elon won't change his mind once again. This is a very interesting story, so let's explain it. On October the 2nd, Musk's legal team apparently sent a letter to Twitter to put an end to the feud that had started in July. As the news made rounds on the internet, the Twitter stock soared almost immediately, hitting 22% at the end of the day. With shares rising, both experts and Musk are confident that everyone will come back to the table. Interestingly, in Musk's letter, the tech icon claims that he'll only go through with the deal if Twitter agrees to drop the lawsuit. Looks like Elon is striking where it hurts. Is it working, though? Is Twitter going to give up the ace up its sleeve? Well, one Twitter spokesman didn't let us in on what direction the company plans to take, so we have little to no idea. All they said was, "We have received the letter from the Musk parties which they have filed with the SEC. The intention of the company is to close the transaction at $54.20 per share." Interestingly, the judge in charge of the Musk versus Twitter case, Chancellor Kathleen McCormack, has not yet received a request to halt the case. I therefore continue to press toward our trial, set to begin on October the 17th. Yikes. So, maybe Twitter does want to take it to court. According to the sources so far, the two parties have not reached an agreement yet. It's understandable that Twitter is taking its sweet time thinking about the situation. Before it considers Musk's revived acquisition proposal, the microblogging site has to think about how to avoid getting stuck in a situation where the billionaire pulls more of his shenanigans. They don't want the deal to drag on even more, and so it remains in their best interests to continue the legal fight. Or the other thing they could do is add new provisions to the original contract. If, however, they do go through with the deal, we expect that it wouldn't take so long since the regulators, board members and shareholders all have already signed off. Of course, we might reach an answer if we dig out why Musk is proposing the original deal again. According to legal experts, it's because the Tesla CEO isn't too optimistic about winning the trial, scheduled for October the 17th. According to Columbia Law School professor Eric Talley, going to the trial was a lose-lose situation for Musk in every way. In case he won the trial, Musk would have been forced to work with a company that he essentially thrashed in court, which, let's be honest, is not a good look. On the other hand, in case of a loss, the billionaire would have been forced to pay interest to Twitter for delaying the deal, ultimately driving up the price of the acquisition. Twitter's concerns about Musk's seriousness is based on his previous hesitancy to buy the company and allegations of fraud. An attorney representing Twitter has already put forward a class action on behalf of the company's shareholders. The letter stated that Musk should be required to make a substantial deposit in case he plans on backing out again. The court should also hold him accountable for paying any interest for delaying the closure of the deal. Other than this, both parties have to consider the situation with the lenders as well. People like Morgan Stanley agreed to provide some money in debt financing to help Musk pay for the deal. Morgan, for one, had agreed to $13 billion. And with the deal negotiations picking up pace again, these guys will have to pony up. However, with all the faults Musk pointed out with the platform and the drama that ensued, Twitter is arguably less valuable now, so it's not yet clear if lenders will be returning back to the conversation. Talley certainly suspected a lot of them popping left and right, saying that they're no longer willing to fund the deal, but that hasn't happened yet. However, months before this fiasco, back in May, we were seeing reports of companies backing out of financing the deal. Two firms, Apollo Global Management Inc. and Sixth Street Partners, that were partly interested in financing the deal, apparently left the financial talks. This came right after the news of Musk having second thoughts about the deal was made public. Though there's a chance that it might not happen at all, since, like Musk, these lenders have some legal obligations, making it hard for them to back out so easily. With that, experts are worried that Musk might need to sell more shares to fund the deal. The multi-millionaire entrepreneur has already sold $15.4 billion worth of Tesla stock this year, but with the way things are, he might have to chip in an extra $2 or $3 billion by selling his stock. And that if there are no more surprises with his financing anymore. On that note, Musk has been trying to cut down the price tag on the deal in recent weeks. According to The Times, Elon was seeking a discount of about 30%, driving down the value of the platform to a measly $31 billion. But as anyone could have guessed, those talks never went through. However, Musk didn't give up. He was back looking for a discount of 10%, but according to reports, that offer was rejected by Twitter. Remember that at the end of the day, Musk can still walk away under the terms of the original agreement by paying a $1 billion breakup fee if things don't go according to plan. Putting these complications aside, what decision is Twitter going to make? Well, Vanderbilt University finance professor Josh White thinks that the company's board will agree to suspend the litigation and go ahead with the deal. The public saga has taken a toll on Twitter as well as its employees. There was a chance that the legal action set for a hearing for the end of October would not only damage Twitter's brand reputation, but also harm Musk's standing in the market for erratic behavior. So, it goes in both parties' interest that they finalize a deal and make a seamless issue. That's it for today. Subscribe to our channel and hit the notification bell.